Hi everyone! On today's video, we're going to discuss the best ways to scalp the market. As you all know, I am a stock trader, and today I'm going to discuss some of my favorite scalp setups that I tend to trade in the open bell. So with no further ado, let's get right into it. Okay, so getting started here, what is scalp trading? So first and foremost, scalp trading is a short-term trading strategy that involves making multiple trades throughout the day to profit from small price movements in the financial markets. Traders who employ this strategy, known as scalp traders, aim to take advantage of short-lived price fluctuations and typically hold positions for only a few seconds to minutes. The goal is to accumulate small gains from each trade, which can add up over time. Now, remember that it doesn't mean that you have to take tens of trades per day, but you can use a few strategies to take. I normally take 2, max 3 trades per day. Okay, so scalp trading requires quick decision making, careful analysis of the market conditions, and often relies on technical indicators to identify the potential trading opportunities. Okay, so continuing here, I'm going to now talk about 2 of my favorite strategies, which is, the bounce off of VWAP and the dip and rip off of a moving average, the volume weighted average price off of a support level or so. So I'm going to get into my charts. First and foremost, I just want to, say that I like trading stocks that have high relative volume and have, the obvious stocks. So I am looking at my scanners and I'm not just trading any type of stock that dips or that bounces off of VWAP. There has to have that momentum, that volume, that liquidity, easy to get in and out, the right price, the right float, etc. You can trade these strategies also with any other asset class, like we said before, with Forex, with commodities, etc. And so with no further ado, let's get right into the charts and I'll explain as we go what each really mean. So we're looking at a stock that I traded actually this past Friday. It's GXAI. This stock had it was a top gapper. It had a lot of volume, liquidity, relative volume. It was an obvious stock for a lot of traders trading this around the world. And of course, it had news. It had a catalyst. The only thing that I did not like about this stock in particular was the price. So as you can see here, this, gapped up from this, I believe, 25 cents, let's just say, and it moved up in pre-market. This orange background, if you can see, this moved up from 25 cents in pre-market all the way up to a hopping $1, I believe $1.70. Okay, so that's where it got my attention, and it started hitting my scanners once it crossed the $1 mark. So then my attention kind of got into it. I started doing my technical analysis, looked at the charts, looked at basically the price action on, on the ladder, on the tape. And listen, it had a lot of volume. It had a lot of interest. A lot of people were talking about the stock, and it had news. So, there was a lot of other stocks, but this is one of the ones that I actually took a trade in the open, which I'm going to talk about. But we're talking about, dip and rip. We're talking about, the volume weighted average price, so VWAP bounce. And I think this chart, since it's very recent, I wanted to share with all of you. Again, you can trade these types of strategies, these setups with any other asset class. And with any price range, really, it just, you have to adapt it to your strategy, right? Being a scalper. So again, it's getting in and out very quickly. Okay, so first thing that I'm looking here is that this moves. Let me take my arrow right here that I got. So basically, this moves. This moves up. So I'm going to be pointing the arrow at what I'm looking at. So this moves up with volume pre-market. Like we said, it goes all the way to 170. I didn't trade none of this part. But again, just as an example, I want to explain here on my chart what you see. So this white line, this is the 9 moving average, okay? The orange line is the VWAP. What I do like, those type of quick bounces and, you know, just a quick scalp off of VWAP, get in, you know, get 10, 20, 30 cents, and I'm out. And then this blue line is the 20 EMA, okay? So we're gonna be looking at this white line, the 9, and the VWAP, which is the orange. So you can see how this moves up with strengths, you know, makes that new high over here, rejects, and where does it go to? It actually pulls back all the way to the 9 EMA, as you can see, and that's like around $1, which is another criteria that you want. You want to buy these, you know, you want to scalp these positions off of some kind of support. You're not just buying any dip anywhere, right? My strategy is, or I'm buying that first bounce off of VWAP. I'm not gonna buy the second, the third, the fourth, the fifth. You know, I want, you know, for me, for example, this is moving up. The first bounce off of 9 EMA is pretty acceptable. So if this wasn't the open market after 9:30 a.m., I would probably have taken this trade right here for a quick scalp. And this actually goes from $1 to all the way back to 170, right? So, you know, it's a 70-cent move in about 3 minutes. This is the 1 minute chart, by the way. And, you know, 1,000 shares at $1 and selling around 170 or so, you know, 70 cents, that's $700 profit. Okay. And you're having a really tight stop on this. So you're not, you know, my stop on this would probably be between 5 and 10 cents, the most. Okay. So this is one example off of 9 EMA. This is a dip, quick dip off of 9 and selling the pop. Now you can sell 50% right here and keep the rest to see if it moves higher, which it does, until it basically stops you out at your stop loss of your entry level. Okay. Now the other dip I like is off of VWAP. As you can see, you know, this is a stock that has volume, that it has a lot of eyes on it. You know, it's holding its $1 level, moves back up, rejection, you know, and it crosses 9 EMA, but it does dip to VWAP, just like a cent above VWAP, and it pops back up. So this is showing 105. And it goes all the way to 124. So 20 cents move on a quick dip, you know, with 1,000, 2,000, 3,000 shares. You know, that could be, you know, between $200 to $600, 1,000, between 1,000 and 3,000 shares. So that's how quick you can make money. And of course, you can lose money as well if this doesn't work out and it keeps selling off. You got to get out quick, and that's why you need to have your stop losses and you need to buy these dips off of some valid support to have, you know, the percentage that it's going to work out on your side. It's going to be more unfavorable on your side. Okay, so let's move here because I don't want to, you know, make these videos too long. But let's look here at these, at my trade at the open. So this was a classic dip and rip off of the open. Sorry about that. Okay, there we go. I got the arrow. So basically, I didn't like this candle, this rejection candle. That's the first thing. So I thought this was going to be the backside, front side and backside. But again, this starts showing that it's holding that 1 minute, it's holding that $1 level. And it starts moving up with volume. It reaches that 124, 125 mark, and it moves very quickly. And I told myself, you know, this has ranged. I think this has, you know, the possibility. I had the conviction that this could move back up to the highs, but I didn't want to trade it around this area because of this rejection. There could be a lot of bag holders. So I was looking for a dip and rip, and this goes all the way above the 9 EMA. It's holding, and it opens exactly at 120. At $1.20 it opens. It dips to the 9 EMA at 118, and that's where you want to look at the price section, at your ladder, at your tape, and you want to see green on the tape, and that's when you're gonna, you know, click to take your position, and you're looking for the break of the first pre-market pivot, which is at 125. Okay, and so I actually pressed the button at 120, 121, and I got filled between that price, and I sold half my position at 128, and I sold the rest at 135, I believe it was. I was out of my position at this area until it got to 160, actually it hit, until it got to the reversal, and it didn't hold. This was such a harsh reversal that it crossed all the moving averages, and that's why you have to have your stop loss, you have to have, you know, your profit stop as well, and you have to have a plan on your trade. So for me, this was a very quick dip at the open, rip off of the pivot, selling half and selling the rest with the next push. This is a classic, one of my probably favorite plays that I like. And again, I'm not trading any dip and rip at any stock. I'm looking for stocks that are making these kind of moves, that they're holding the pre-market, and that I can kind of, you know, set myself up close to the 9 EMA, close to the VWAP, where I can have a pretty tight stop loss, and that I can take a bigger position and not overtrade. So I'm not looking to trade this every candle. I'm taking 1, 2, 3 max trades. I actually on Friday only took 1 trade, and I sold it in 2 parts. Sold it half for here at 128 and the rest at 135. And I was out, and I kept looking, and if this kept going up, who knows, maybe I would have taken another, if it crossed the pre-market high and it held this area, I might have, you know, reloaded for another move back up, but it didn't happen. And I was happy with my profits, you know, and it's all about, you know, having a plan, sticking to your plan, and being able to trade another day, right? So, yeah, so I'm gonna let it go here. I hope you understand what a dip and rip is, and, you know, a VWAP bounce. And again, just one thing, you know, the volume weighted average price, of course, it's a technical indicator, right? And it's used by a lot of traders, the 9 EMA as well. And the volume, the VWAP actually calculates the average price of a security based on both the volume and price. So it's a very respected indicator. A lot of, you know, short traders, they're looking to short this when it rejects VWAP. Traders, you know, you can use the VWAP in different ways. You know, a lot of traders, they like to let it test it and see if it's going to break VWAP, and then if it comes back up, they might take a quick scalp off of this little area. But I do like to take the scalp off of VWAP whenever it's moving up with strength and it's holding levels, and I know that the probability of the first, the first test off of VWAP, it's going to be bought up by, you know, short sellers are going to cover in this area because they know there could be a bounce, and then, you know, long buys traders, they're looking to see if it's going to hold this level and go move back up. So there's a lot of probabilities in this type of plays. And those are, you know, 2 of my favorite plays, the VWAP bounce and the dip and rip. Okay, folks, well, that's going to be it for today. I hope you've enjoyed this video and it's been a bit educational. If you haven't already, subscribe to the channel, like this video, and I hope to see you all on the next one. Safe trading.